Wait, is Tom Lee out of his mind? He sees little to no downside and forecasted that the stock market will reach new heights. Let's see what Tom Lee has to say.
And our next guest argues the risk reward is much better now than even before the trade war started. FundStrat's Tom Lee is a CNBC contributor and joins us now from Miami. It's good to see you as always. How's that possible? How's the risk reward better now than then?
Scott, I think when we go back to February, when the market was at all-time highs, we have to keep in mind we had a lot of uncertainties ahead of us, and we weren't necessarily looking at 2026. You know, the tariff visibility is much better today than it was 3 months ago. And when we look at 2026, I think that there are things to look forward to, such as deregulation, tax cuts, and actually a Fed that's on hold now, but probably doing more cuts now in 2026. And then from a company perspective, companies survived, I think, a black swan event. You know, that waterfall decline in equities and the sort of the near heart attack of the economy still was an environment where companies produced earnings that beat expectations. I mean, so this is the fifth stress test for businesses. I mean, when I put all that together, I think PE's probably going to be higher in 6 months than lower. And when you think about 2026 earnings having upside, I think there's still upside for stocks.
So, I mean, because you keep talking about 26, you're not writing off the rest of this year. We still have 7 months to go.
Yeah, we have a lot of history to make between now and year end. But keep in mind that waterfall decline in stocks also was almost a complete reset in positioning and sentiment. You know, investors were forced to liquidate when the VIX hit 60. We know a lot of institutions didn't add risk back as the market rallied. So I think the pullbacks are going to be pretty shallow because investors just are underinvested at the moment. And then when you look at sentiment, it's barely turning neutral now. So if investors have been fighting this rally, as they become more neutral or more optimistic, that's upside for stocks.
I mean, Professor Jeremy Siegel, like you, has grown more bullish, pointing out, in his words, the Trump pivot on the tariffs. But he still acknowledges the fact that the tariffs are likely to remain in place, whether it's 30 on China and 10 on everybody else. That's still somewhat regressive, is it not?
Yeah, well, I mean, you know, we are now in a new world of tariffs, and businesses are adjusting. I think one of the things that we're seeing is that the market is now in a position where they can start to look through some of the messy adjustments, right? We know there's been a disruption to the supply chain. I think stocks can look through that. But you're right, Scott, there is now this world where there's essentially a consumption tax in place on things that we're importing. But that doesn't mean we have to actually have the PE decline or the markets to fall. It's now just something we have to kind of manage through.
What about yields rising? How much of an issue potentially is that?
Well, I think Fed Chair Powell made a good point that long-term yields could be rising because of inflation volatility rather than inflation expectations going up. That's actually an opportunity for markets because if inflation volatility delivered is less than expected, then we could expect yields to come down in the future.
Yeah, but what about, I feel like the bulls are finding convenient excuses for why the rates on the longer end are going up. What if it simply, Tom, is the fact, and I don't mean to single you out, I mean, the professor in his answer to the question, too, put more credence in the fact that, well, maybe it's because growth is going to be better, not so much the deficit. However, what if finally the bond market is saying enough is enough and it's time to get real? And if you all don't, we will.
Yes, Scott, there was a moment like that a few years ago when, you know, when an auction went badly and many people declared this was sort of the end of the ability for the U.S. government to finance, and people panicked and the VIX surged. But even in that moment, it proved to be a buying opportunity for equities. So I think if there is a moment where maybe the bond market sort of has a tantrum about that, and I'm not saying it's going to happen, but if it does, I think we have to remember the U.S. is a huge economy. There is still a lot of trust in the U.S., and I think those who've called for the end of U.S. exceptionalism, I mean, I think that's been the premature call. And if none of those is true, the bond market and investors can handle even a 0.47% 10-year.
The best strategy is to stay invested, regardless of the volatility. Trying to time the market will only make you go insane, especially if you're a retail trader. I have another video to share about Jack Dorsey explaining Bitcoin to Norway's sovereign wealth and how Bitcoin will transform the world once adopted.
Bitcoin is a protocol for moving money around. If Bitcoin is used not just as a store of value, but as a currency to move money around between people or between businesses and people or businesses and businesses, as that becomes more and more a thing, which I do think it becomes over the next 5 years, then we can launch Cash App and Square in every single country that has the internet. And that allows us to serve more people better, faster. And because Bitcoin is open, it's not controlled by one company, it's not controlled by any one government, it's completely transparent. People can see what it does, and we can solve all the problems that we would task with governments and companies to solve by doing it transparently and by doing it openly. Because again, it's the internet and it goes to internet principles. So I'm hoping these financial systems take on more internet principles and we can truly be an internet company instead of going market by market by market, which is just a really slow way to build for the world. You can't build for the world. You can only build for these particular markets that you happen to be approved in. And again, you have to be approved by another company. You have to be approved by these things that don't have your interest or even their customers' interests at heart.
So what needs to happen for Bitcoin to function more effectively?
I think it's happening right now. Like more and more people see that it's valuable. Every time that number goes up, people get more interested in it. I don't believe in Bitcoin in its final stage as just a store of value, but I think it's a necessary part of the path to get to, I think, the next big one, which is remittance across border, moving money between businesses, moving money between people across borders, which is happening in many countries outside the United States and Western countries today because there's no other options. And then it gets to currency. As people get more comfortable with it, as they see that it's not going away, Bitcoin is over close to 16 years old right now. It's never gone down. It's never had a security issue. It has no leader. It has a completely open roadmap, and it's determined by a consensus development model. These are all really incredible ways to trust it as a currency. So as it becomes more understood and it feels like it's going to last, I think people will trust it more and more as like, oh, this is the way I'm moving money to my family now. And this is the way I'm buying coffee now. And this is the way I'm buying computers or whatever. It's a deflationary currency, so it doesn't encourage spending. It does encourage savings. But I think it has a really interesting path and provides a lot of interesting business models for the internet. If Bitcoin existed before we started Twitter, we'd be in a much different state, and I think we'd be in a much better state, and we wouldn't have all the issues that you see with social media today, because it's not a tax on the system. It allows for a business model that's aligned with the people that are using it every single day.
Why would social media be better if you had Bitcoin?
Because you could get to commerce right away. You could get to subscription right away. You didn't have to get permission from Visa and MasterCard. You didn't have to wait for the security of such payments on the internet by virtue and by the grace of Visa and MasterCard to build it. It's built into the internet and it works at massive scale. So if we had that tool and we had commerce at that scale, we could build a pretty phenomenal business that's like all communication is exchange of value. Commerce is exchange of value. If you pair currency with communication, you ease commerce and you ease buying and selling of things. And the internet wants to create efficiencies there. But the biggest friction in that creation of efficiency were the payment networks and the banks and the way we currently deal with money. So Bitcoin upends all that and changes it and provides a completely different path, which is, in my view, far more exciting and allows us to build a much bigger business, more valuable business.
Please let me know your thoughts below. Don't forget to like and subscribe to the channel and click on the link below for the free community. Thank you for tuning in and see you next time.